Good evening, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hopefully you guys had a very good day in the markets today, and hopefully you're excited for the long Labor Day weekend that awaits us after tomorrow's action. So in today's markets, guys, we had the SPY and the QQQs pushing higher. It was largely a day of big tech outperformance. If you take a look at the list down here, most of all your big tech names were doing very well today, all except for NVIDIA after their little bit of an earnings decline yesterday after the close. But for the most part, the markets were performing well. We had most of your major sectors cooperating. However, some were left behind. In terms of the news that we got today, we did have one big piece of news, which was a GDP revision, which showed that in Q2, the economy expanded at a rate of 3.3% year over year versus the 3.1% consensus, which is what did lead to a little bit of bullishness very early on. We also got some preliminary numbers for your PCE inflation prints that will come out tomorrow. We got the quarter over quarter ones today, and you can see here that they came in at 2.5% quarter over quarter. The estimate was 2.6, so a little bit better than the expectations. And in terms of your PCE prices, those came in at 2% year over year versus the 2.1% expected as well. So apparently inflation is not really surging in terms of going higher and higher and higher. It's actually quite normalized right now. And I'll bring your attention to the one chart that I love the most, which is your Truflation Index. This measures 30 million different items on a daily basis. It's a much more comprehensive analysis of overall inflation across many different things that consumers buy every day. And as you can see right here, we are currently sitting at about 2.16% in terms of inflation across those 30 million different products that this study does measure on a daily basis. So as a result, inflation numbers, we're going to get some big ones tomorrow in terms of the PCE, but I would not be surprised if they come in a little bit either in line with estimates or even maybe slightly under, especially since we got the quarter over quarter prints today. Tomorrow, what you'll have to look out for as well is personal income and personal spending, both good indications of how the consumer currently stands. And the estimates are actually supposed to be better than the month prior. Personal income should be coming in at 0.4 versus the 0.3 from last month, and personal spending 0.5 versus the 0.3% that we recorded just last month. So those are your remaining volatility catalysts for the remainder of the week on the Friday session. In terms of today's video, we are going to get into a few key things together and get a sense of where the markets currently stand. Number one, what we'll be doing is we will be going over two earnings presentations that I have for you guys. That is going to be Affirm and Sentinel One, both companies having their earnings after the close. Special shout out as well to Marvell, Dell, IREN, and Ulta Beauty. We might be able to take a look at some of those tomorrow because tomorrow we'll be doing BABA. So maybe I can slide in one or two extra of these ones that I'm not doing today. But for today, we'll focus on Affirm and Sentinel One, both having very nice moves in the after hours. After we're done our earnings presentations, we will go through our normal technical analysis rundown of our major market indexes, followed thereafter by our big tech name list as well. And at the end of the video, sadly, no biggest gainers and losers of the day today. We did a lot of that yesterday for about 15 minutes, so I will do them tomorrow in Friday's recap video, just to let you guys know what we could possibly be looking at next week. Next week will be a shortened trading week, the Monday, of course, being Labor Day. So without further ado, let's jump right into the video. Moving into the S&P and the QQQs, the SPY brand new all-time high, 0.35%, and the Qs, 0.63, not trailing that far behind in terms of the heat map. Not looking too bad. Big tech for the most part, very healthy day, and even a lot of your semiconductor players, very healthy performance as well. Seems as though every single big tech name benefited from NVIDIA's earnings, except for NVIDIA themselves. Financials not doing too bad. Healthcare, sadly, a rotation day to the downside. Consumer defensives still a little bit weak, and the bottom half of the market a little bit mixed, even though some of your longer term yields were down. Into the one-day relative, you can see that even better, to where the market was kind of just split in half, but good thing the heaviest weights in the index were higher, which brought the SPY and QQQ up with them. Communication services, technology, energy, cyclicals, financials, and industrials green on the day, and to the downside, real estate, healthcare, defensives, and utilities. On the 1 week relative, we still remain very healthy, only defensives, utilities, and healthcare to the downside, and everything else pushing a lot higher. And now technology has made its way into the second position, right behind some of your consumer cyclical names. A lot of the consumer cyclical names have been having a very good week this week, and I assume that's because of the rate cuts that are now starting to be priced in for the markets for the month of September. So before we get into more technicals, guys, let us do a little bit of a rundown here on our earnings. And we're going to start off with a very fun company, one that I've been invested in, and I do have call options on as well, which is going to be Affirm. So Affirm, obviously one of your more fintech-oriented plays, and also you could argue that it's part of the whole consumer discretionary category. This one will additionally benefit from some macro tailwinds, namely the interest rate cuts that are coming in the near-term horizon. Now, moving into their earnings, guys, they absolutely crushed it. EPS up 62% and revenue up 4.7%, which led to this stock being up 15.5% in the after hours. You might remember the last time that I was talking about Affirm, well, I talk about it often, but the last time we did a deep dive was after last earnings, and this one was a screaming buy, so hopefully some of you were able to participate with myself and with our Discord members as well. We are now up a decent amount of money, to say the least, almost pretty much a 2x on any shares accumulated after last earnings, and also up a tremendous amount on those call options too. However, let's dive into some of the numbers and we'll show you why Affirm stock has been such a key player of this most recent, in the most recent rally that we've had over the past 3-4 months. So taking a look at some of the easy numbers, you'll see here that they beat on all their current estimates for the quarter, and they also raised their guidance. That was very, very good from the company. $870 million for revenue. The estimate was $858, so a nice little raise on Q1 sales. Obviously, it's going to be Q3, but they report a different calendar year. And then your EBITDA as well was raised from to 17 million from 13 million. Some of the highlights from this quarter: revenue up 33% year over year. Gross merchandise volume up 43% year over year. The number of merchants that are also affiliated with Affirm now up 24% year over year. That is fantastic. And the customer count keeps growing every single quarter, now up to a very cool 23 million customers, which is 24% year over year. Additionally, one key standout here, guys, is the operating margins. Affirm has somewhat struggled with positive margins, both operating and net margins as well. You can see that their net margins here were very, very, very choppy. Their operating margins as well. And I'm happy to say that Affirm is now finally rounding the corner. But the CEO did give us the guidance at the beginning of the year that by Q4, they were going to turn an operating profit and going to turn a net margin profit as well. Both of those two things have already happened, so that is very good for the company. Now, taking a look at some of the business highlights here, you will see what a strong performance this company has given in the past most recent quarter. Gross merchandise volume always up and to the right, 43%, as we were saying, very strong. Now, the breakdown between their direct-to-consumer business and their marketplace and Affirm cards is as follows. So let me just blow it up real quick so you guys can see this better. So 132% growth in terms of Affirm card GMV. That is very, very solid, guys. Affirm card active customers is up right now, right? 97% growth year over year, which is absolutely fantastic. So you can do this one of two ways, right? You can either go on their marketplace. A lot of people find Affirm when they're checking out for a product, and then it says, hey, would you like to buy now, pay later? That's when people learn about it. But you can also go to the Affirm website and shop across all their merchant partners to see if there might be some deals that you like. Maybe if you are interested in some buy now, pay later. The Affirm card is something that you can use in stores that have those merchant offerings and just basically load them up on the card right away. So that way you don't have to do any terms of signups on their website directly. Consumers have been really liking the Affirm card, all things considered. Now, here you go. Transactions across diverse channels. You can see here that the point of sale versus Affirm transactions, point of sale, 76%, and only 24% through Affirm. So still, most people are finding those products when they're checking out on different websites. In terms of the product composition, Affirm does a few different things. Number one, 71% of all their business comes from interest-bearing products, meaning when you check out, they will charge you a fixed interest rate, 3%, 4%, 5%, depending on your credit score, of course. Then 15% of their business comes in pay in X. So this is short-term, 0% APR, pay in a certain amount of periods. This segment, 50% year-over-year growth, fantastic. And their 0% APR on the monthly, that is up 93% year over year. Fantastic growth metrics across all of their product composition. Very nice. You can see that they have a wide range of categories right now, anywhere from general merchandise to travel and ticketing, fashion and beauty. Electronics is a big one for the most part, and a whole bunch of other services that you might have used in the past. Look at this category growth, guys. Look at the category volume growth. double-digit growth in every single one of their categories, extremely strong, which is why Affirm is the marketplace leader in this service. Active consumers, very strong, right? So 23 million as it stands right now. In terms of the transactions per active customer, that is up 20% year over year. That is the yellow line right here. So as you can see, not only are they gaining more customers, but the customers that use their platform are using it more frequently as they do enjoy the services. Those two metrics combined lead to very strong growth and very strong return customers. You can see here, 95% repeat customers for Affirm, very, very strong. You can see that the blue category is your repeat customers and the orange category or yellow is your first time customer transaction. So when people start using the service, they tend to like it a lot. And we're going to get into why Affirm can do the infamous 0% loan, how it works, and why it's one of the best in the industry overall. Look at the amount of active merchants that are still currently partnering with Affirm. You're looking at 26% growth year over year in merchants. Very strong selection of merchants for the company overall, extremely good. And in terms of revenue, of course, you can see that beautiful 33% growth year over year number. Affirm just continues to go higher and higher and higher. Very, very, very strong here. In terms of other things that we have to notice, it's all about the scale towards profitability. And one metric that the company uses and discloses is what they call the revenue less the transaction cost. That is up 30% year over year. Very, very strong number overall. Just goes to show that the company is able to scale into profitability. That was questioned for a very long time, but is no longer an issue for Affirm overall. In terms of their operating expenses, they're doing a good job controlling those where they can. Technology and data analytics, of course, that's a good portion of their R&D. They have to spend money on that. But as a percentage of revenue, you can see that the yellow line right here, that amount is becoming a lower and lower percentage of overall revenue. Sales and marketing, they're doing a really good job here, guys, of controlling those expenses. In the last 2 quarters, they spent a lot less money on that, which leads to the yellow line dropping once again, percentage of revenue declining very nicely. And then their general and administrative expenses as well as a percentage of revenue is coming down very nicely. So the company is able to control expenses as they scale. That is what you call very nice operating leverage. You can see here that finally, on a GAAP operating basis, they are now positive. For the first quarter in Affirm's history, this is a very big shift for the company, and it's one of the main reasons why the company is up 15% in the after hours. You would expect this profitability to continue for the company as well. That is GAAP. They've been at adjusted operating income profits, but of course, that is due to accounting measures, but people really want to see the GAAP. And now the GAAP is positive, so very strong numbers overall. Now you might be wondering, do they have a problem possibly because it's a buy now, pay later service, right? Do they have a problem with delinquency or whatnot? Well, as a matter of fact, no, not really at all. You can see that every single loan that was issued, depending on when it was issued, the delinquency rates are very, very, very low. They've went from 3% and now oscillating at about 2.5% to even low 2 percentage points. Very, very strong. If you want to compare that with some of their industry competitors, you can see here that Affirm is the black line. Their delinquency rate is right there, slightly above 2%. And when they compare them against different issuers and different other members in this cohort, right, whether you compare it with, they don't name them, but you can kind of like, you can kind of assume who they are, right? Companies like PayPal, companies like Square, companies like Klarna, who offer these types of services, companies like Sezzle as well, all higher than Affirm right now. So how does Affirm do it? Why do they have such a low delinquency rate? And why is their customer, and why do their customers have a better credit quality? Well, it's all in terms of this loan right here, the strategic value of the 0% APR loans. You might be wondering, how does Affirm give 0% loans? Who actually pays for it? Why would they do this? They're not making any money on these loans. Well, not quite. So essentially, these are the only true zeros. Consumers know that when they see a 0% APR offer from Affirm, it's the real deal, unlike virtually the rest of the industry, which kind of has some hidden fees. So if there's no hidden fees, and if it really is true zero, how do they do it? Well, the companies pay for it, guys. Why do the companies pay for it? Because it leads to greater product sales for those businesses. The interest rate that you are seeing is 0, but Affirm will charge 3, 4, 5% to the merchant, and the merchant will agree to pay that because we have some statistics here. It's led to higher sales. As you can see right here, their volume for these merchants lead to an increase in business. On average, these rise by over 10% in terms of the applications for those products, which then leads to an order value increase of more than 15%. and a GMV uplift of more than 20%. So when customers go on those websites, they will load up a larger cart and they will just load up more product value overall. Both things are good for those merchants, which is why the merchants agree to offer that on the customer side, but they agreed to pay the interest rate behind the scenes. 95% of the 0% APR GMV from integrated merchants is paid for by the partners, and pricing has been stable overall. This drives customer acquisition, of course, as we know. And overall, guys, this leads to people that have better credit scores overall, which have access to these products. Here you can see, when weighted by amount spent, consumers that exclusively use 0% APR products have an average FICO score that is approximately 40 points higher than the average Affirm borrower. So very, very, very solid overall. This is one of their most rapid and fast growing metrics in the entire business. And it's doing wonders in really improving the overall credit worthiness or credit quality of their average client. That is why the company is doing so well. That is why the company is currently still one of the market leading businesses, because there are other companies that offer 0% APR, but it does sometimes come with an upfront fee or sometimes some hidden fees. Affirm does not overall, and that is probably why the customer retention rate is so high. So now that we know that their business is firing on all cylinders, we got to talk about the valuation, because the stock is up 15% right now. Is it a good buy? Well, we reiterated the fact that indeed they are coming into positive operating margins and positive net margins. This will be bringing more and more money to the bottom line. That is very good. That is the only problem that Affirm has had prior, because Affirm has never had a revenue growth problem. Their revenue growth for the next few years is going to be very, very nice. The revenue growth rate is expanding at about 24% for 2026 all the way through 2028, and EPS, because they're becoming more profitable on a both GAAP and non-GAAP basis. This is the flip, guys. You guys know me. Fundamentals wise, when you're looking at an unprofitable company that is starting to flip towards profitability, that is when you really, really, really have to look at the company, deep dive them, and possibly give them a chance as well in terms of investments, right? So trading at $91 right now in the after hours is Affirm a buy. Well, they currently trade at a forward price to earnings of 116.7, but keep in mind that is because the EPS is coming off of 0 and ramping very fast at 68% per year. If you divide this by your EPS growth rate on average for the next 3 years, you will get a PEG ratio of 1.72, which is very okay. You get a price to sales metric of 6.68. This is very good, guys. If you compare it against either a tech company or a fintech company, this is a very decent valuation, whether you measure with the PEG ratio or whether you measure with the price to sales. Now, of course, it's not as good as a deal as some of us got back here when it was a screaming buy around the $50 mark, but I still do think Affirm is very well positioned to capitalize on this ever-growing segment of the market, which is essentially buy now, pay later. We saw that credit quality is not a problem for them at all. And keep in mind, what do they do with their loans? Do they house all those loans themselves? No, those loans are sold to financial institutions. So Affirm is not left holding the bag overall, which is a very good position to be in, which is not the same position that other companies, not to name names, but some companies like PayPal and Square, they do hold a lot of their loans, which means that they are left holding the bag if ever anything happens in terms of credit quality or in terms of customer credit worthiness as well, right? So the delinquencies are not a problem. Operating and net margins are improving. Sales pipeline is full. They have a very high retention rate. This is my favorite buy now, pay later company and one of my favorite fintech players in the entire market. At $92, sure, it is still a buy, maybe just a slight nibble, but in the event, for some which reason, you see it pull back from where it is right now. It's been on a very beautiful weekly uptrend with improving fundamentals. If they pull back into where it was before earnings and do the infamous breakout retest, I do still think, guys, this is a fantastic position to be building if this is the type of company that you do like, a fast-moving growth stock with macro tailwinds, meaning interest rate cuts, and also possibly the recovery of the consumer, because we know consumer discretionary has been very soft in the last 2-3 years. That will not last forever. You got a lot of tax cuts coming into the economy. You have a lot of rate cuts as well. Those two things will be tailwinds for the consumer and possibly tailwinds for Affirm as well. So that is everything I had for you guys for that earnings. Hopefully you enjoyed. Now, Company number 2, we're going to be talking about Sentinel One, a company that doesn't get that much attention in the whole cybersecurity space, but a company that I think that you guys should pay attention to. There's a reason why I didn't do Marvell tonight or Ulta Beauty or other companies. I mean, shout out to IRN. I know a lot of you guys really like IRN. We'll probably do those tomorrow. Another data center play like CoreWeave and like NBIS. But we really got to take a look at Sentinel One here because I think it could just be a very beautiful opportunity. You might remember that I do already have some call options from the bottom, and right now this stock is up about 9%, but still at $19, is it a good buy? When you look at this chart, yes, absolutely. And Sentinel One is doing something that we just saw with Affirm. They are rounding the quarter to profitability. And a lot of these cybersecurity companies, guys, are non-profitable entities. So when one starts turning a profit, you really have to look. So let's take a look at their earnings real quick. 41% beat on EPS. That was fantastic. And you also had a very small beat on revenue, but revenue largely came in line. If we take a look at some of the easy numbers, you'll see here that in terms of their current quarter, the results were somewhat mixed. As we said, sales came in pretty much in line, but they did beat in terms of their profitability metrics, which is what Wall Street is closely looking at when a company is not profitable. In terms of the guidance was a little bit mixed. The guidance came in roughly in line with what people were estimating for sales. In terms of EBIT and for the fiscal year as well, well, the guidance slightly underwhelmed in terms of earnings, but sales came in roughly in line. So that being said, they're improving profitability, but they're kind of just staggering right now around the 0% mark, but it will be getting better, guys, over the next 1 to 2 years. So this is definitely a company we want to pay attention to. In terms of the numbers for this quarter, with an easy chart to read, you're looking at revenue of 22% increase year over year, net new ARR of 20% year over year. Of course, they run a subscription model for that juicy recurring revenue. Customers over 100K, 23% year over year, and EPS 300% year over year. This is a company that prior used to struggle with positive EPS, but no longer. And now look, the operating margins from all the way down here 2 years ago, now into profitable territory, exactly like the same chart we literally just saw on Affirm. This is when I like to pay attention to these businesses. Now, Sentinel One is one of many cybersecurity companies in the market, but you might be wondering, what does this company do different than the 20,000 other companies out there? Well, I'm glad you asked. So we'll take a look at that in the earnings slides in a few short moments. In terms of commentary from management, we surpassed $1 billion in ARR and delivered record net new ARR, continuing to deliver robust growth and platform adoptions across AI, data, cloud, and endpoint. Guys, this is an AI cybersecurity company. Now, I know I just threw out the crazy buzzword, the AI buzzword, but it actually truly is AI, like only AI driven. So that's why it's going to be so interesting as in comparison to other names out there. Here's what the CFO had to say. We continue to deliver top tier growth and margin expansion, underscoring the scalability of our model and operating leverage. So in terms of the highlights here, I want to highlight what Sentinel One does different from the rest of the industry. So you might remember that the other day we did CrowdStrike. We also covered Palo Alto Networks a few weeks back, right? Essentially what they do is this is people driving tech. So I like this infographic by Sentinel One. What Sentinel One does is tech assisting people. Let me just sum that up really quickly. So CrowdStrike and Palo Alto Networks, a lot of their clients are very, very large clients. Clients like Microsoft, clients like Google, clients like Amazon, very large corporations with a very complex tech stack, right? Companies with a lot of employees and a very large team, essentially, of software engineers and a very large team of basically a very large cybersecurity team, essentially, right? Very large, very complex organizations. As a result, yes, CrowdStrike and Palo Alto Networks also use AI for threat detection, but at the end of the day, you do need a lot of human input, a lot of manual input. So it's kind of like a dual system. You have AI and automated threat detections, but those need to be reviewed, and also some things in those systems, the parameters, need to be modified by a team of engineers. That is not what you need to do with Sentinel One. Sentinel One is kind of like an out-of-the-box solution. It's basically set it and forget it for less complex operations, right? Companies that don't have, tens of thousands of employees and a very large team of software engineers. It's kind of they cater to maybe the smaller and medium-sized enterprises, which are looking for an out-of-the-box solution that is basically just a set it and forget it solution. So let's move on further. Now that we've kind of described the product, right? In terms of where we are, in terms of their offerings, the same offerings that a lot of other companies do as well, right? But a lot is on the AI focus portion of this business because it truly only runs on AI. It's an out-of-the-box solution and it learns your business as it moves on. So let's move into some of the, I mean, you can clearly see, right? They win a lot of awards and stuff like that. Sure, that's all good, right? But in terms of the key results, 60% reduced likelihood of a major security event, which is very good. 55% faster to remediate the security threat versus when you would not have their software, and a 338% return, 3-year return on investment once you have bought their product. Very, very solid. So it lets you know the customers are really benefiting from this one. Here is your Magic Quadrant by Gartner Research. It does show that Sentinel One is really up there with the likes of, CrowdStrike, Microsoft, Palo Alto Networks, and a couple more, right? So very, very, very solid performance there by them. Happy to see them as well as Wiz, the company that Google literally just bought for $25-30 billion as one of the top in terms of customer choice up there, right? So moving on further, they are also at the top tier of your growth versus innovation index. Sentinel One all the way there in the top corner, better than CrowdStrike, better than Microsoft, and better than a few other key players in the niche. In terms of the partners that they have, well, they have a couple partners that you may recognize, you may not. Some of the ones that are more common here are Anthropic and Scale AI, of course. But now that's all good for the qualitative aspects of the company. But what about their financials? So let's have a look at their annualized recurring revenue, the ARR, right? Over $1 billion, steady up and to the right, which is exactly what you want to see. And in terms of the revenue growth quarter over quarter, you're at a very cool 242 million, which is very strong. In terms of customer momentum, we already said that they have 23% year-over-year growth of customers that spend over $100,000 or more with the platform. Very solid. 40% of enterprise customers have adopted 3+ solution categories. You might remember this from when we covered CrowdStrike and Palo Alto Networks. So the goal of all these companies, when they offer, 8, sorry, I'm scrolling a bit fast there. When they offer like 8 different modules, right? If we're looking at all these modules, the goal of these companies is to include the most amount of modules for a customer. That way they get the most in terms of bang for your buck, in terms of ARR, right? Now, 20% of enterprise customers have adopted 4+ solution categories. This is 4 times the growth in the prior 24 months. So very good. They're getting very good at upselling a lot of these customers once they're into the ecosystem. Now, one of the main points of this company, guys, has to be the margin expansion. Let me just do a little history lesson here on Sentinel One. In terms of their net margins, you can clearly see on an annual basis, they had very big net negative margins, and we were kind of looking to the point in time where all of that would kind of start to reverse because all of these cybersecurity companies have the same type of thing to where they generate very strong gross margins because the cost of goods sold is very low. It's a SaaS company, that should be the case, but it's always a question of when will they be able to bring some of that to the bottom line to operating margins, meaning when does the R&D, the sales and marketing, when does that become a smaller portion of their revenue as they scale to eventually they become profitable on operating and eventually at the end of the day become profitable on net margins as well. Well, if we take a look here in terms of your non-GAAP numbers, right? So gross margin currently still standing at 79, non-GAAP numbers, and it's good, right? First, you go to non-GAAP profitability like we just saw with Affirm, and then eventually down the road, you will also be GAAP profitable as well when you stop doing the accounting tricks, as some people don't like to look at non-GAAP, but it's, I mean, when you're a fast growing company, right? Like these tax things that they do in terms of how they repurpose their income statements and things of that nature, they're perfectly legal to do. Most companies do them, right? So first things first, non-GAAP operating margins, 2.2%, the first positive read. Very happy to see this with the company. And in terms of net income margins on a non-GAAP basis as well, 5.4%, the best amount in the company's history. So definitely moving in the right direction overall. Really good to see that. And the free cash flow margin as well is actually positive, which is a nice change for the company. These margin expansion numbers, guys, are probably the biggest highlight of the company. Yes, we could take a look at the fact that they are growing revenue in excess of, 19% per year, which is very strong. But we want to see the EPS growth. We want to see the net margin expansion. And that's exactly what Sentinel One is delivering to us after this most recent quarter. So keep that in mind in terms of the forward guidance, looking very good. Gross margins will be maintained at what they are, and operating margins also will be right around kind of what they are right now. So they will be improving and scaling over time. But I think this company definitely does have its place just because of what it offers, right? It's a niche solution. Well, not so niche as a matter of fact, but it caters to, right, a lot of the companies that the larger institutions cannot cater to. So it is a very defined segment of the market, smaller and medium businesses, and it does everything, as it says here, with AI. There is no human intervention required at all, which really fits really fits the bill for a lot of these companies that just don't have complex operations and or don't have very large teams of software developers that kind of have to intervene and kind of tweak all of this stuff. It is purely done with AI, which is why I really like this company so much. Another reason why I like this company is the valuation. At 19 bucks, where it currently still stands in the after hours, you might notice that this company, sure, it's down from the 2021 highs like a lot of companies, but it was just all the way up here in December. It was at $29, but unfortunately sentiment around the company and sentiment around a lot of software companies, right, has just been down. I mean, there's many software companies out there, especially cybersecurity, that are not at their 2021 highs, not even close, right? You can look at a company like, let's say, Datadog, still not at the 2021 highs. You can look at a company like Zscaler, still not at the 2021 highs. I mean, other companies are like CrowdStrike and Fortinet, and those companies are much higher than their 2021 highs, but there's still a whole cohort of companies that are not. This is arguably the cheapest player in all of cybersecurity right now. You guys probably know cybersecurity as these companies that have ridiculous price to sales multiples and ridiculous PEG ratios as well. We just looked at CrowdStrike and Palo Alto Networks the other day, and we did the valuation, right? And we were saying, like, listen, they're not very cheap no matter which way you cut it, right? Palo Alto is like a 3.53 PEG and a 13 price to sales. Sure, they have amazing growth, but still, right? CrowdStrike, we just literally looked at it yesterday. It has a 4.26 PEG and a 22 forward price to sales. This company right here, Sentinel One, which is finally turning the corner to profitability, has a forward price to sales at 19 bucks of 5.86. This is literally one of the cheapest in the entire cybersecurity landscape. Additionally, in terms of the PEG ratio, it's only at about a 1.67, which is very good. If we were to drive a, base and bull case scenario for the company, only using 8 to a 10 price to sales, which is not asking so much, guys. That's literally how much they used to trade back all the way up here. If they get the valuation expansion, if Wall Street agrees to let them expand there because they're improving margins and sustaining the ARR growth rate and the revenue growth rates, which could be a very logical thing to assume, if we give them an 8 price to sales for 2026, the share price could possibly be around $30. That's literally just their forward sales number for 2026 times 8 price to sales, which would be expansion of the multiple, which would bring them back to almost a $9.6 billion company. Right now, they're sitting at about 5.86, so you'd have about 64% worth of upside, or $31. That's the base case for 8 price to sales. I'm not really being too crazy right here, guys. The bull case, I'm not even going up higher than 10. At a 10 price to sales, you'd be looking at a $12 billion market cap by the end of 2026, which would be about 105% upside, or a share price of 38.9. So the downside risk, in my opinion, guys, is not too much. The company's already very cheap. We've been accumulating down here in the lows around 17 to 14. And if it comes down there again, I will just accumulate a bit more because the risk to reward for this company definitely does make sense. My initial price targets will be around the $22 mark. First stop, which is your former resistance area, resistance here as well, resistance back here, support. So very clean area right there. Take profit number 1 and take profit number 2 is going to be the very big one right here. So whether you're into it for an investment for the next couple of years, or whether you are building some call options positions with me and you want to derive some possible take profit levels, well, for us, take profit number 1 is there for a bit of the position, and then the big take profit there for our call options as well. But as always, I say, guys, I put a lot of time on my calls. These are for 2027. I have the $20 calls if you guys are wondering, okay? So that's it for all our earnings presentations for today. Hopefully you guys enjoyed that. Now let's dive into our technical analysis portion of the video. And of course, we're going to start it off with the good old S&P. So in terms of the SPY, we can clearly see the bulls still remain in absolute full control. Whoops, didn't mean to draw that line, but the line in the sand level for any pullback, guys, is still going to remain at the lows of last Wednesday and Thursday. Beautiful daily uptrend continues for the bulls right now. Any pullback, still looking for higher lows, anything above 634, looking for a higher low for possible further trend continuation. The logical next step for the S&P would be about 650, which is just $2 above the current price. We will see if tomorrow's price impact has anything in terms of the inflation numbers towards that. We also know that seasonally speaking, we're a bit in a choppy period of time right now, so it can really go either way depending on the macro data points that are released in the near-term future. The next big one after tomorrow is going to be the non-farm payrolls released next Friday. The markets are still feeling a little bit greedy. The fear and greed index is currently measured at a 66, not too bad. And if we take a look at some of our momentum indicators as well, it does show that the markets are still relatively healthy. Percentage of stocks above their 20-day EMA is still at a very healthy 73. So coming into overbought territory in terms of market breadth in the short term, but some of your longer dated moving averages are doing a good job curling up higher. 65% of all stocks are currently above their 50-day EMA, not at the highs that we saw at the peak of the bullish momentum that we had early in the month of July. And percentage of stocks above their 200-day moving average is sitting at a very healthy 60%. So we can clearly see a lot more of the market has now been participating than even was in the month of July, at least when you measure against the longer dated moving average. This is the best read that we've had all year. You would have to go back all the way to last December to find similar reads when the market was relatively healthy after the entire tariff debacle, or rather before the entire tariff debacle started to happen. So the SPY still looking good. Bulls in control of the short-term daily uptrends, in control of the weekly uptrends as well. Moving into the QQQs right now, up 0.63% on the day. Not back to the new all-time high just yet, but very decent retracement size to the upside by the bulls right now. They've created a lot of space between us and the line in the sand lows, which currently still remain at about 559. You were just looking for maybe the continuation of the daily uptrend, which could possibly lead us into the 585, 590 location right up there. In the event that you unwind, pay attention to this level right there, guys. If you breach this level, for whichever reason, over the next 1 to 2 weeks, you're just heading into very healthy weekly consolidation, in my opinion, and possibly even very healthy monthly consolidation, the bottom end of which I know a lot of you guys are planning for, anticipating, trying to predict a 5 to 10% pullback on the Qs. If that does happen, you will have a very nice shopping opportunity down here towards 540, down to about 511, 200. The 12 EMA, is right down there. Prior resistance is currently established as new support for the markets. Any pullbacks would be a fantastic buying opportunity if you are ever looking to buy into things a little bit heavier than just your normal bi-weekly DCA, which you should be doing with your paychecks. Moving into XLF financials right now. Strong day for financials, closing relatively close to the all-time highs. Looking very good though. Daily uptrend is clear as day right now. Any pullback looking for a new higher low. They're probably going to be riding this 12 EMA until something happens with the markets. In terms of the weekly is looking very solid on XLF as well. Nothing to see here. They perfectly backtested, guys. Perfectly backtested 52 down about 50.5. That was previous all-time high resistance. It is current support for the markets, and now the bulls are looking for a bit more momentum, continue on to the weekly uptrend, and even the monthly, guys. The monthly is looking pretty good for some expansion, and even if we consolidate, guys, you got a lot of support down here. They just literally showed you how much support that actually was. So I'd be a big fan of picking up a few more financials in the event that the markets unravel for XYZ reason. Moving on to healthcare right now. Healthcare, one of your weaker performers on the week, but they had a phenomenal last 2 weeks of trade. So what we're seeing right now, guys, is just a very casual pullback on healthcare, currently trying to form a daily downtrend, but a daily downtrend to what? Who's in control here? The weekly bulls. Beautiful engulfing move, looking for a new higher low, anything above 128, looking for that higher low. A lot of moving averages here. Funny enough, the longest one, the 200 weekly, and the 12 EMA, both sitting right there. Beautiful support back here, and you can clearly see that with the monthly time frame, right? We're into this whole zone. So some of your institutions and a lot of retail as well are kind of just accumulating some healthcare positions. You still have a bit more time to accumulate. I don't think you're late to this trade at all. We've only been back to the 50 monthly EMA a few times in the last 15 years, and every single one of these occasions has been a great time to accumulate some names individually or the ETF as a whole for some possible recovery back to the upside and start, stop being the worst performer essentially of the S&P. Moving on to SMH, semiconductors right now. So semiconductors close to the high, and it's funny because they did this without any of NVIDIA's support. As I was saying, there was a lot of semiconductor companies today that benefited tremendously from NVIDIA's guidance, except for NVIDIA, right? So NVIDIA said that there's going to be a $3 to $4 trillion opportunity in the data center build out by the end of the decade. That is huge for a lot of other companies such as Broadcom, but also for a lot of the component companies such as Micron and other things of that nature. So that being said, SMH not looking too bad. The bulls are trying to get this daily uptrend back into shape. We were going to need an all-time high break for that to really be set in stone right there, but they did set a lot of space. In the event, because you have been consolidating here, kind of sideways with an upward bias for a better part of the last, month and a bit right now. In the event you come back towards the lows, the line in the sand is this guy right here, 280, where I drew this little yellow line. If you break that, it's a daily downtrend, and also just synonymous with weekly consolidation. So please keep that in mind. The monthly timeframes on this one are still looking healthy, but any unwinding of this trade would just result in a monthly higher low. And the same thing can be said about the SOXX, which has, in my opinion, a better weighting distribution of the top holdings. SMH is very heavy in NVIDIA as the top holding. SOXX is a bit more balanced. This one still not a new high just yet, and the line in the sand is still put at 238. In the event that you unwind towards the lows, you guys know the drill. If you come back down there, a phenomenal opportunity to be shopping for your favorite companies, whether that's Broadcom, whether it's NVIDIA, whether it's AMD, whether it's Micron, whether it's ASML, whether it's TSM. Whatever it is, just understand who's in control of the long-term timeframes here, looking for a monthly higher low into beautiful support for possible further continuation and extension into Q4 and into 2026. Pay special attention to the monthly MACD right behind my head right there. Guys, that's pretty good. We're talking about a, 9-month period right now where it's been bearish, finally starting to pivot to bullish on the highest time frame of them all. Moving on to the Russell right now. The Russell, not a bad day, 0.12% to the upside. Looking not too bad in terms of continuation, right? Very strong, as a matter of fact. Daily uptrend remains set in stone right now. Your higher low is set down here, 223.5. You just be looking for a higher low. And I'm looking for this higher low, guys, because it's the infamous breakout retest. Retest of what, you might ask? The 2021 highs, resistance. It was resistance for a while. If you get the back test, could be a great opportunity to reload some of those swing trade longs or build positions into the Russell, because we know this one has been lagging behind other indexes for a better portion of the last 3-4 years at this point in time. So the Russell is currently coming into some macro tailwinds, the rate cuts, the tax cuts, all things that will advantage some companies that just are not profitable yet. Some of these small cap players could see some tremendous lift over the coming 3, 6, 9, 12 plus months. So looking forward to it. So any positions accumulated here need to have a longer duration thesis than just maybe the next 1 to 2 weeks. So please keep that in mind. On to the VIX right now. The VIX still doing absolutely nothing, so we won't spend too much time on this one. All you need to understand is with the VIX incredibly low right now, it's a decent opportunity to be going shopping for some companies that are at lows, maybe that don't have that high volatility, for some leap call options. So think of the names that are a bit left behind right now. Not a bad opportunity. And if the VIX shoots up for whichever its reason, that's when the option selling really comes alive. When the VIX goes higher, it means a lot of the market will be red. You'll be able to find some really attractive strike prices far under the market. When the VIX is kind of low, you got to play things tight, which is why you should be applying my strategy rules, waiting for companies to pull back into support, because the last thing you want is to get trapped at the highs of something, selling put options, and then they skyrocket the VIX on you. Volatility comes in, things start dropping 3, 4, 5, 6% per day, and you're trapped at the highs on some companies that you were just not patient enough to play. On to the 10-year yield right now. The 10-year yield trying to go for the 4.2 level. We were saying that this 4.2 level is very important, guys, very important. Why? Well, because we've been struggling with it for a very long time right now. Look, right? It only breached it once over the course of the March session. Since then, it just has been stuck here. So we're looking for the breakdown on the weekly. You're also looking for the breakdown below 4.75, 4.7 on the 20-year yield for the possibility of the TLT expansion trade. TLT's just been coiling down here, accumulating a bit. So I've been saying as well, decent time to accumulate some bonds, but as rate cuts come closer and become more of a certain thing, maybe that's when the trade is going to come alive. So pay attention. We're coming up to the September 17th rate cut meeting, possible rate cut meeting with the Federal Reserve. That is maybe when your longer term bonds could come alive. Moving into gold right now, gold hitting into one of our big resistance areas, talking about 34.21 down to 33.70. Still no break in close above, right? If you want to see the upside continuation, you got to give me a break and then a retest perhaps. Then we can maybe review this one for a possible breakout and retest trade. As of right now, the bulls have tried to do this, I don't know, about 6, 7, 8 times. They've gotten rejected every single one. So I'm not going to sit here and say, yeah, maybe number 9 is the charm, right? No, I'd rather wait for the confirmation trade and then the retest, give me a better entry, give me a stop loss below here, and then I can actually go for it because it'll prove to me the bulls actually want to claim this level somewhere that they failed 7-8 times prior. In the event you come right back down to your lows, I mean, there is somewhat of a short opportunity here. If we're trying to take a short and put the stop loss above, some of the recent highs, 34.40, 34.50, and you just go for the downside reversal trade back down to these lows, 3,300 down to 32.62. So please keep that in mind. Those are the only 2 trades on gold that might be available right now in the near term for some shorter term trades, right? Moving on to Bitcoin and Ethereum right now. So Bitcoin, I mean, the day just shifted, but Bitcoin yesterday, well, today, I mean, it was up 1.2% today, essentially. Not too bad, but we know who's in control. Still, your short-term bears on Bitcoin right now, looking maybe for a lower high into lower low. They're very close, guys. They're very close to the big support level, right? 107.5 down to 100. It wouldn't look so awkward to complete this pattern into a bit more support. Sure, you can make the argument that we've been testing some of the highs. This is true, but more of the meat is down here. So if we get one final flush on Bitcoin, that'll probably be last chance to dance in terms of accumulating some positions. You guys know me. I've been selling put options under the market using BITX as a proxy. If you guys want to use MSTR, you are also free to do that too. It is currently a weekly downtrend and we are just in monthly consolidation for this current period right now. Maybe we close the month of August a bit soft, start off the month of September a little bit red. They do a quick shot down into there. You get your 2 monthly candle retracement. And then you might be looking for the long expansion coming into the late Q3, Q4 period. In terms of Ethereum also, I mean, bit of a flat day for them, really flat on the day, 0.09. So the bulls are still battling here, trying their best to hold on to the short-term moving averages. That being said, the price action is very, very, very choppy on the daily right here. You can make an argument that they might just be looking for the tightening up and then the explosion, sure, but other people could argue that we might just be heading a little bit lower. Well, that's the problem when you're literally at a 50% retracement, right? You're literally 50% right now. So tightening range, yes, call it a bull flag if you want, but all I see right here is maybe just some soft sideways weekly consolidation. In the event that you push that weekly consolidation a bit further, you are clearly coming back down to 4,000 to 3,700, which would be a very nice reload area for some swing trade longs, in my humble opinion. The medium-term bulls are in full control of this chart, looking quite good. And for the month of August, which closes in just 3 short days, if you get one snap back move into the early month of September, it could be a nice area for a bit of a monthly back test before possibly embarking on the rally, maybe end of Q3, end of Q4. That's for like a longer duration time horizon in the event that Ethereum completes the pattern and does choose to consolidate on this weekly before we move a little bit higher. But all things considered, it's not looking too bad. That's everything for your overall market rundown. Now let's dive into some big tech names. So moving into Apple finally making the move that we were looking for here, up 0.9% on the day. We were commenting on the fact that the bulls were looking pretty good setting up into this week with the daily higher low being set and trying to go for that daily uptrend expansion. Your line in the sand level remains the lows of last Thursday, 224 to be specific. If you unwind this, very simple, guys. You're just going for a bit more weekly consolidation. Very healthy, though, into this massive area of support, which was resistance for the bulls for about 3 months. They've now captured this line of defense. If we pull back into it, fantastic opportunity to add a little bit to the Apple position. I currently have some Apple positions running, and my profit target for those is about 240, 245, the top end of those trades right there. For some call options that we bought here and down here as well, Apple's been a phenomenal catch-up trade for the entire market, and you can see right here that the stock is still down 7% year to date. So I do think Apple is set up really well coming into the early portion of September where they will be releasing their new products. And the chart also looks pretty good, guys. Essentially, weekly bull flag into possible expansion looking pretty good. Moving on to AMD right now. AMD up about 0.87% after NVIDIA earnings. Not too bad of a day for AMD, of course, but we know that we're kind of stuck in the support region right here, 170 down to 157. The clearest time frame for me, in my opinion, guys, is the weekly. We're just consolidating in a very nice fashion on the weekly time frame. You can see the bears tried to push a couple times below the support levels, and the bulls are playing some very good defense. Beautiful level to be basing some trades off of. And I keep saying, guys, it's tough to know whether or not we come down here with the rest of the market and breach, or whether or not we just continue to move higher. As of right now, it looks like the bulls want to play a lot of defense, But sometimes market catalysts are just too strong, right? If non-farm payrolls next Friday comes in and is really soft, well, you will get the breach of the level and come down here. The easiest way to play this one, if you do have a long-term thesis on the company and you agree with the valuation that you agree with the statement that the valuation is still cheap, well, there's a couple ways to play this. Number one is accumulate here and make some room to accumulate down there as well, because both of these would just be very healthy locations for a monthly higher low. Whether we stop it here or move down lower, both would be very healthy in terms of the size of this monthly move. And you're looking for the expansion of the business for the next 2-3 years. AMD, in my opinion, very easy for it over the next, 6, 9, 12, 18 months type of thing. Very easy for it to breach above $200, $250, even $300. The valuation definitely would support that, so please keep that in mind. Moving on to Amazon right now. Amazon up 1% on the day. Very strong push by Amazon. Back above and cleared our area of support, which is 227 to about 218. We know that it's been a daily uptrend, and the bulls are looking for a bit more. We will have some short-term resistance levels around 235, and then it's up to the all-time highs beyond 240. So the bulls are not looking too bad. The weekly time frame is also quite clear in that respect. It's been a weekly uptrend for this entire time. You got the higher low, you're looking for the expansion, very healthy. In the event that we pull back into support again, you will find me selling some short put options below the 220 mark and adding a little bit more Amazon shares as well. Valuation of Amazon in around 220 is still very manageable, and one of my favorite companies, guys, moving into the next 2-3 years. All lines of business are doing very well for Amazon. On to Google. Google up 2% on the day. New all-time high for Google. 212s. It seems as though just yesterday, well, not yesterday, but it seems as though Google was struggling so much to catch up with the rest of the market. There was so many narratives against the company, right? And now those narratives are coming undone one after one. Search revenue, advertising revenue still super strong. Cloud revenue extremely strong. It's still a company that generates 30% net margins, a phenomenal amount, and the $70 billion in buybacks that were announced are definitely helping out the share price right now. That being said, who is in control of this market right now? It is definitely your bulls, guys, right? The new higher low is set at 206.43. Daily uptrend resumes at this point. We are now clearly through this area of resistance, 207 down to 201. And I know what you guys are thinking, yeah, but what about the Department of Justice headlines? They can hit, and we'll see if they do hit. If they do hit and we come back down to this key level right here, 194 down to 187, I'll be a firm buyer of Google in two ways, selling some put options down here, but also accumulating possibly more shares for the long-term portfolio, as it's going to take a lot to get these bulls off of this weekly uptrend. The higher lows all the way down here, guys, all the way down there. So any move lower, looking for a higher low for further trend expansion on the weekly, but also the monthly time frame as well. They have so much space to come down, consolidate, absorb that headline, push it out to the Court of Appeals for another 12, 18 months, and then by then the share price will probably recover as well. So any dips on Google, big dips that is, I will be buying. Moving on to Meta right now. Meta up 0.5%, trying their best to go for a new daily higher low and a new daily uptrend. Why? Because we lost it back here, right? Beautiful daily uptrend after earnings. You lost it by flushing the lows with the tech sell-off of last week, and now the bulls are trying to set up some temporary local bottoms and go for the daily uptrend shift. We will see if they can do it over the next few days of trade. The clearest time frame, in my opinion, remains the weekly time frame. Very solid moves by Meta right here. Clean and clear weekly uptrend. The line in the sand is still that whole 735 area, because if you breach this area, guys, well, sadly, you're going for more daily downtrend action. You're going for the earnings gap fill, and you might just come back down and test this beautiful support, 710 down to 680, at which point I would be a buyer of Meta shares. And you guys know I have a temporary swing trade in motion right now with the stop loss slightly below the lows, because what I'm trying to determine right here, is this the weekly bottom? If it is, perfect, we get some follow through. If we don't, perfect, I have a very tight stop loss, and I will reevaluate that trade right there. But in terms of shares for Meta, even up here at 760 for a DCA down, not the worst proposition, still trading under a forward 30 price to earnings multiple for the end of 2025. Moving on to Microsoft right now. Microsoft 0.57%. And I was telling you guys, wait for the bulls to show you where they want the local bottom to be, right? Because before then, it was just a daily downtrend. Now what you have is a clear-cut pattern, right? You have a couple legs of downside right here. The most recent leg of selling was very small, and now the bulls are trying to engulf it. So now it's up to them to prove to us that they want to do it, get back the short-term moving averages, set a new daily uptrend, and then we will be able to say, Perfect. This is your weekly higher low around the weekly 12 EMA, and you might just be looking for one further leg of weekly continuation, essentially, right? That being said, no swing trades on Microsoft from me, but if I had to position one, the stop loss would be very close because, as I said, you are looking for a thesis that this is the weekly higher low and you're going for more. So if that's your thesis, well, obviously the invalidation point of that thesis is down here. Personally, myself, I like to wait for, sometimes I like to wait for confirmation. You might remember Meta, this is a type of trade that I didn't wait for confirmation. I am also doing that same thing and keeping a tight stop loss. If you're trying to do that on Microsoft too, this is the trend reversal trade, right? It's one of the toughest ones to get right if you're not waiting for confirmation. If you wait for confirmation, it makes it a lot easier because they prove it to you, right? However, if you don't wait for confirmation, you need to trade with a bit of a tight stop loss just to make sure that in the event that you get unwound there, well, you're not holding the bag all the way until the true weekly low is actually found. Moving on to Netflix right now. Netflix up 0.65%, looking very solid right there. The Bulls playing some good defense around these lows. 1210 down to about 1185 is your support location. The Bulls held it a lot last week. It was a nice area back here as well. And what you're just looking for here, guys, is you're looking for the Bulls to continue this uptrend that they started, almost lost, and now looking to breach a little bit above 1250 to make that happen. In terms of the weekly is looking for the same thing. You are looking for the new weekly uptrend. Why? Because we lost it here. They flushed the lows, right? Same thing like not like Microsoft. Microsoft didn't lose the weekly uptrend. They just had a weekly pullback. But right now, Netflix trying to get that time frame back. Not looking too bad. The valuation up here at about the 1250 range is still a little bit rich. But if you have a long enough time horizon, like the next 5 years, it probably still does make sense. Management's guidance, I will remind you, is $1 trillion market cap by 2030. So the compound annual growth rate from here is about 20%, 22% type of thing. It's about a $500 billion market cap right now. Moving on to NVIDIA. NVIDIA down 0.79% after their earnings, but it's definitely not because they had bad earnings. Now, I know everywhere on Twitter, somewhere on Reddit, and everywhere, they were kind of criticizing NVIDIA's earnings. We did the earnings on the channel yesterday, guys. Their earnings were fantastic. Everything is sold out. Everything is sold out for NVIDIA. Now, of course, there was no China guidance, which kind of removes a little bit of what people were looking for. But still, this company right now at 175, where it was trading yesterday after their earnings, still only trading under a 40 forward price to earnings for 2025. 2026 is actually a lot better. It's actually like mid to low 30s. And the PEG ratio right now at 1.71, not too commanding at all. They get that premium valuation for price to sales because they're still just growing so darn fast. 50+% year over year. That will be continuing per guidance yesterday into next year as well, 2026. Looking very solid. So in terms of what that means is probably all dips on NVIDIA still remain for buying right now. So the short-term daily price action is looking a little bit choppy. That's normal. Looking for expansion beyond 184. They tried it today, couldn't get it done. Line in the sand remains 168. If you flush this daily downtrend, you're going to look to support 171 to 165 to act as some defense. And if you unwind that without new highs, it's just still, guys. I know that was a mouthful, but at the end of the day, right, this is still just looking for weekly higher lows. Nothing more, nothing less. Weekly higher lows, and maybe simultaneously as well, monthly higher lows too. This chart looks very solid. As a result, any extended pullbacks in late August, in the next week, into the early portions of September, I do think are great opportunities to be picking up a bit more NVIDIA. Definitely not a criteria for selling any shares up here. If you believe the growth story is done, you can just go watch what we said in terms of their earnings analysis in yesterday's video. Moving on to Tesla right now. Tesla down about 1.04%. Not the worst day for Tesla, but we know the bulls have been struggling with this resistance, 360 to 340, touching the bottom end of that today. What they're going for here is daily uptrend continuation. We came almost perfectly into the area I was highlighting yesterday. These guys, right? Almost perfectly, not looking too bad. The weekly swing trade is still underway and still alive in the event that you were able to pick that up. And we kind of call it on the channel, right? The test of this area, not too bad. That weekly trade is still in motion, although this is take profit area number one. Take profit area number two for that one, of course, is the higher one, 385 to 404. Tough to enter here without a confirmation of the break. If you get the confirmation of the break and test resistance, come back, you get the good old break, retest, and possibly run. That might be the next time I would get interested in Tesla, or just fail and come back down to the lows. That would be the next area I would be interested on Tesla, but taking it here into resistance, not my favorite style of trade. Moving on to Palantir now. Palantir up about 0.9% on the day, still a little bit soft for good old Palantir. The one thing that we have to keep in mind, though, is the bears have tried every single morning recently to flush this one down, and the dips keep getting bought. What the bulls are looking to do here, they're looking to form a new base of support and go for a new daily uptrend shift. We will see if they can get that done. That will be a break of 163 to the upside. Short-term support below remains put at 148, down about 140, the lows there and the highs there. It's not a very strong area, but it's the closest one that we have, right? Onto the weekly, you're looking at a touch of the weekly 12 EMA. Your weekly higher lows are down here at 129. So keep in mind, the bulls are looking for a weekly higher low and maybe going for the expansion. In the event that we were to take some swing trade longs here with a thesis that this indeed is the weekly higher low, that is where your stop loss should be, below 142. And obviously your take profit target would be weekly continuation back to the 190. Now, the risk to reward profile is not too bad at all. If that is the thesis, you're currently looking at about a 1.8 to 1 R&R, which is not too bad for Palantir stock. Of course, we know that it's overvalued. Of course, we know that some of the longer term technicals are very overbought, especially the monthly. But that is why if we're trading this one, we need to keep a tight stop loss, just so the event that we don't get completely unwound by the higher timeframes, seeking a bit more accumulation at some lower levels. Moving on to SOFI right now. SOFI, still one of the hottest stocks in the market right now, 4.33% to the upside. The bulls looking for the upside continuation. We will see if they can get it done, or whether or not they keep consolidating, right? I wouldn't mind either way. I have my SOFI shares. I'm perfectly fine with it going higher, but in the event that we pull back down a little bit, it would just make perfect sense, right? You'd be coming back down 24.25, down about 22.25, and you would just literally be back testing this area from back there, right? Looking very solid. Weekly uptrend is clearly in control for the bulls. So if in the event you get the pullback, I'm a big fan of selling some puts down here, accumulating some shares, or if we wanted to go for possibly some longer duration call options, this would be the area that I'd be looking to reload those. They would be very long expiry ones though, because I'm looking for the expansion of the market cap for SOFI. Sure, the short-term price appreciation is good, but if you have leaps, guys, you have to be able to hold through very volatile swings and go for the expansion of the business, go for the expansion of the multiples. I do believe that SOFI can be a 40 to 45, maybe even more, $1 billion company, you know, into 2020, end of 2026, into 2027, but it is going to require a holding period. I do not think that the next batch of gains in SOFI, of course, is going to be as fast as this batch, right? This was like what? Like a 3x almost in like 4 months. It's not going to 4x, 3x in the next 4 months as well. Who knows? Maybe I'm wrong, but that's not my expectation. So any positions here should be taken with a longer term time horizon in mind. Moving on to Uber right now. Uber closing the day at around $96, up 0.66% on the day. Daily price action, very, very choppy, right? It's been choppy this entire time, Uber right now, but the daily bulls are in control. Higher lows are set, 91.32. Just looking for a back test here. 93.5 down to 90 is your support range. The weekly time frame, in my opinion, provides much better clarity. The bulls are just looking for expansion of the weekly time frame. Beautiful weekly uptrend, and they're looking for expansion into the $100 range. If we drop back down into support, aka the lower 90s, you might just find me selling some put options in the high 80s, and maybe, just maybe, I'll accumulate a couple more long-term shares of Uber. I bought most of mine back here, but now not the worst proposition in terms of the valuation on a forward basis. Matter of fact, at 89, you can make an argument that the company is actually still cheap, especially when compared with other tech companies in the current landscape of the market. Moving into TSM now, lastly, TSM down about 0.43%, still kind of caught in this whole choppy all-time high range right here. So very decent price action from TSM. Daily downtrend, nice 78% retracement. So now they're going to be looking to reset this daily uptrend. We will see if they can do it. If they can't and the bears unwind this one back to the lows, you're just looking for some very healthy weekly consolidation. We've been talking about this weekly consolidation for like what, 5, 6, 7 weeks right now. And we have also been saying that it's still a good area to be adding some shares. The valuation, you know, for a semiconductor company is still quite low compared to many other companies in this niche right here. So I'm a big fan of adding here all the way through pretty much 220 down to about 210, which would probably be the final resting place in the event that the bears really want to run down with this one. You're just looking for a very casual monthly higher low down back there into 210. If you're asking me where I would be interested to sell some put options, probably like low 220s or under 220. 220 down to 210 is probably going to be the pocket that I'll be looking for a bit more consolidation. But up here, decent for maybe some little bit of or some shares in terms of additions to our long-term portfolio, if this is one that you have in the long term, but very, very, very choppy price action in terms of the short term right here on the chart. That is everything I had for you guys for today's video. Hopefully you guys enjoyed. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. Would love to have you back. We do these videos every Monday to Friday after the close. Hopefully I see you back soon. And also, if you have any questions, guys, please feel free to leave them down below. Any questions you want, whether it's on macros, stocks, options, trading strategies, whatever you want, I'll do my best to help you out in the comment section. Keep in mind as well, in the event that you wanted to join a community of traders and investors such as yourself, with over 200 other members in our community as of right now. We've been growing really well. A lot of our members, most of our members have been finding, as a matter of fact, all of our members have been finding tremendous amounts of success with us in the community. We do a few things in there every single day. Number one, what we do is we trade the markets. And you will get access to all of my personal trades as well, whether those are the wheel trades, call option trades, call debit spread trades, anything, credit spreads, swing trades with shares, any type of trade that I choose to do, you guys will also get an alert for that as well. Here's all of our trades that we've made in the past 3-4 months. The green little check marks are wins, the red little circles are losses. So as you can see, guys, right, we do a lot of wheel trading and other types of trades. Definitely something for everybody in there, but also we also build long-term portfolios in there every single day. I send alerts for long-term portfolio buys as well when I do find them and when the market is ready for them, of course. Now, that being said, you also get access to our private morning live streams Monday through Friday, where I stream for about 2-3 hours in the morning at the open. And we also do trading live, and you can ask me all of your questions in real time on your stocks, your options, your long-term portfolios. You can do the same thing in our chat rooms all throughout the day. Ask me your questions, and I'm very fast to answer and give very detailed responses. You get access to our private video educational section where I teach technical analysis, fundamental analysis, different options trading strategies that I don't cover so much on YouTube, but that I do use all the time in my own accounts. And also other types of videos, such as how to grow an account, small, medium, or large, what types of strategies you should be using in those accounts. So there's a ton of educational content there, and our members really love that section a lot. And last but not least, you get access to my charts and all of my watch lists. So if that's something that you like, if you like the way that, the support, if you can't or you don't know how to draw support and resistance and you just want to copy mine, it's just an added benefit for our members. You get to copy all my chart layouts. And whenever you do see fundamental analysis as well on the charts, you get to copy that as well. It takes 10 seconds. You can copy all of my chart layouts and all of my watch lists in just a few key clicks of a button. That's pretty much everything for the Discord. If you guys are interested, I'm running a promotion right now. 30% off for your first month in the Discord. You can use code Labor Day in capital letters. I'll leave the code down below in the video description. If you guys are interested in trying out our Discord, being a part of the community, and wanted to get a discount for your first month while you try that out, I'll leave the coupon code down below. It's once again Labor Day, all capital letters, no spaces when you check out for that service. That's everything I had for you guys today. Hopefully you guys enjoyed it. Have a great Friday tomorrow, and I'll see you after the close. Take care and peace.